All right, let's take a look. This is for Sunday, June 1st, looking into going next week. And what we're looking at here at this top chart here is the S&P 500 stocks above the 5-day average. Ticker, the symbol is S as in Sam, 5, F as in Frank, D as in David. And I just converted the candles into a line chart and put a 3-day moving average, which is represented in the red. And I just put these lines at the 70 and at the 30, essentially making it look like an RSI. Okay, so we have the overbought condition up here, oversold conditions down here, and every time it swings on down below the 30, this is where I tend to accumulate and put in bigger positions, and then once it arrives to the top here, I start taking profits and moving up my stop loss. So basically what you can see, the easy money has already been made back in May 22nd, and now we're down here. I'm not saying we can't continue to move up, but you have a lesser going against the wind up here for a longer trend, unless some kind of big news comes. But if it's typical, then it'll just trade sideways here. Here we got the S&P 500, the daily. Just to compare, you could see here's the dip, which was down in this area. The last dip we had was back here, which was in this area as well. And this dip was over here. And once we hit the top, you could see here's the top. We got the pullback. We hit the top on this case here. But in this case here, it didn't go down. You could see it traded sideways, and this caused it to go up until we got to this point here. This probably was the top before we had another little pullback here. So it's not perfect, but the odds are good enough to swing trade it and take all the signals. All right. Now here we have the RSI 5 that I use also. Looking for the swings, dips under the 30 here, or preferably the 20. Look for the swings back up, and also keep an eye on the divergences here, which in this case we may be having one here. You can see prices are pretty much flat over to here, while the momentum has died down. So that's something to be watching. We do have the support of the 200 and the 20 right here, and if it breaks down, we're probably going to either we have a gap fill right below right here and the 50, but I'll explain that a little further on the video. Down here we have the MACD. Don't really use it too much, but I just have it here as a reference. It pretty much works the same way, just to show everybody that these indicators all pretty much work the same way, and if you trade them right, it doesn't matter if you use the RSI, MACD, or even the slow stochastics. So there's no right or wrong. It's just whatever you get used to using the most, and in my case, it's the RSIs. All right. So again, we have a little bit of upside, not too much. So you got to be defensive, move your stops, or start taking some profits. Okay, so the next move, let's go take a look at the other chart here, which is the daily chart, and we're going to go ahead and just quickly go through these real fast. We'll go through the Dow. As you can see, the Dow, we're fighting on the 200 right here, and we have a gap right down here. We've broken the downward trend line, which is good, but now we're dealing with an upward trend line. Let's hook these trend lines here, so we could potentially, by bouncing right here in this area, forming in this pennant triangle here. If you could use your imagination here like that, there you go. So we're going to be ping-ponging back and forth here. Looking closer here, we are above the 5-day moving average, but we're under the 200 here, so that's causing us resistance. If we can break this, then our next stop would probably right up to the top of that 430. So you could see the RSI 2 here. converted into dots. Anything over the 60 mark turns green, and anything below the believe it's the I have it set at the 20, just double checking here, and it turns red. So these are my stop and go signals here. So right now it's green, meaning we're gonna wait. Usually I wait for the first green dot here for the setup, and then the confirmation where it breaks up higher. So in this case it's already happened, so that has passed. RSI 5 right here below, you could see, and let me change that because it looks like I was looking at the 14, so we're going to go ahead and quickly change this down to the 5. There we go. You can see we have the divergence here still, even though we're not to break even here. Even if it was able to break even here, it's still going to have that potential divergence here. So this is just something to keep an eye on, not necessarily to take the trade based on solely on this one signal. So right now it's still showing a little bit of strength, but it's kind of neutral. Don't know which way to go, so better just to wait on this here. Going over to the SPY, we have the head and shoulders. Here's our price target up here. Still hasn't reached it. It has that upward trend line, and it is right on it, and as well with the 5-day moving average as well. So it still has a potential to continue up and tag the 5-day moving average here. If it breaks down and closes below this 5-day moving average, which would also be the upward trend line, we could see the next stop could be the 200 or all the way down to this gap fill. Worst case scenario will be the 50, but we'll have to take one step at a time and see which way it goes here. Looking at the Qs, we have the head and shoulders. Here's our price target based on that inverse head and shoulders, and we hit it back on May 16th, and since then it's kind of been trading sideways. You could argue that we have a bullish flag formation at the same time, and we're still above the 5-day moving average, so we still have the benefit of the doubt of it going a little bit higher. However, what I don't like is the divergence on the RSI 5, which typically tends to play out more often than this actual higher high here. So this is something to be concerned. If we do get the breakdown here, we could either tag the 20, the 200, or the gap here. So from my experience here, most likely we're going to be coming down to this area around the 494 area. Going to IWM, what we got here forming is a head and shoulders, which is good. We finally could see the small caps trying to catch up, and once it plays out, here's your trend line here. If we can get a close above it here, and then we can look for the move up. What kind of move up are we looking at? Well, let's take a measure here. I haven't done that yet, so let's say right there. Here's our neckline. Crunch that up, and let's carry this over. Say it's going to be somewhere in this area here. We're looking about approximately 17% move on this. Target price around 247 area. Once we do get the close above them, we could then more likely reach up to this area here. Not necessarily on a single one shot or a straight up move, but eventually this will be the target on this. So that's something to watch. Even if it breaks down and goes down to this gap and then trades back up, we still have the head and shoulder formation still valid. Let's go ahead and look at the semiconductors. We had the head and shoulders, and they had the measured move. We hit it, and now it's trading around, bouncing around. Same here with the divergence, bearish divergence, looking for a, right now it's being supported by the 220, which is very good. However, if the divergence does play out, then we're going to go down to the gap fill here, and then we'll have to reassess to see what's next. Let's look at the Bitcoin here, but using IBIT, IBIT, and you can see it broke the trend line here, and it's under the 5-day moving average. Let's just zoom in on this here. And once it broke the 5-day moving average here, that puts me on alert. And what I do is look for a close below the break of that 5-day, which it did on this day. So I jumped in on this. Now we might get support, get a bounce, maybe around to this upward trend line, or it could continue on down to my first target is the gap here. This is where take profits area. Looking at gold, it's kind of trading in the wedge area. It is below the 5-day moving average, but above the 20. So it's bouncing around right in here. It's being pinched, you might say. If it does close lower, we're looking down this trend line or to this upper trend line. So it's kind of neutral, you might say. And trying to see if I see any other information here other than this abandoned candle here. You see you got the gap up and gap down. That's usually the sign of a trend change. So right now the odds is going to hit back down to the 50 and where that trend line is. So we'll keep an eye on that. And actually, let me add to this as well. You could see where it broke the 5-day moving average here. So what I do here is just put a line right here, and once I see the closing continuing on here, then this will be a trigger to go short. Let's see what kind of move we got here. For example, 2%, not too much. So it might or might not be worth the move. And I'm looking at the other areas here. We do have a gap fill down here, and another one here. So maybe we'll be getting down all the way down here. That would make it worthwhile. But let's just play it one day at a time. So yeah, why not? I'll take the short and see if it could bounce and then break down here. Otherwise, it's just take a little bit of profit and get out. You never know. Never know about these moves here. Looking at the oil, USO, from what I see here is just a lot of slop going here back and forth. It is trading below the 5-day moving average. It's bouncing on that line. So nothing good that I see here. RSP, which is the equal weight, and you can see we got a downward trend line. So this is taking all the big caps or the big Magnificent 7 and make them all equal weight, and you can see we are making lower lows, so that's showing a little bit of weakness here. And I think that's pretty much it for you guys to show. And we'll just keep an eye on the markets. Alrighty, take care until next time. Bye bye.